Metal prices globally have been under pressure this past year. The primary reason is China. However, factors have now taken a turnaround with the Nifty Metal Index up 10% in the past month and many Indian metal stocks seeing an uptick. Why? Well, the reason is again China. Now, while the world's second largest economy seemed unstoppable at one point, China has been struggling in recent years. Its real estate market has been in a downtrend since 2021, but the global major has finally pulled the trigger on a bold stimulus package, and positive commentary by party members has surely made the metal markets happy. Well, what has China announced? Could the country's real estate industry see a recovery? How does the metal market get impacted? Well, stay tuned till the end of this video to get all these questions answered, and hit the subscribe button if you haven't already. Well, it all started last week when China's central bank unveiled a broad package of monetary stimulus measures to revive its economy. This was mainly driven by the mounting alarms within President Xi Jinping's government about the slowing growth that was depressing investor confidence over the globe. Let's first cover the measures announced regarding interest rates that could help stimulate the economy. The People's Bank of China has cut interest rates on several key lending facilities. This is intended to lower borrowing costs for both businesses and households. The 7-day reverse repurchase rate will be lowered to 1.5% from 1.7%. This not only means that banks will be able to borrow more money from the People's Bank of China at a cheaper rate, it will also help inject 1 trillion yuan or $145.5 billion into the country's financial system. The PBOC is also expected to cut the medium-term lending facility rate by 0.3 percentage points. This is a longer-term loan facility that banks can use to lend money to businesses and households. The Chinese government has also announced a range of measures to support the property market. 3 of China's biggest megacities, Shanghai, Zhengzhou, and Shenzhen, have eased curbs on buying homes, and Beijing's central bank has said that it would ask financial institutes to lower their mortgage rates. The city of Zhengzhou, which is home to about 14 million people, became the first Tier 1 Chinese city to remove all restrictions on home buyers. Potential home buyers will no longer have their qualification for purchasing homes reviewed. There will also be no restrictions on how many homes a person can buy. Shanghai, which is China's financial hub, and Shenzhen, the southern Chinese city known for its tech industry, have announced the lowering of their minimum down payment ratios for first and second homes to 15% and 20%. The lowering of this down payment ratio basically means it's easier for people to buy homes. Authorities of Shanghai, which is also the country's richest city, has also stated that they would reduce the tax burdens on some home buyers. Now, China has also rolled out new rules which aim to expand access to commercial bank loans for property developers. Policies will now allow real estate companies to use bank loans pledged against commercial properties such as offices and shopping malls to repay their other loans and bonds. We also had some commentary made by Chinese Communist Party members at its monthly Politburo meeting. Party members stated that China will implement forceful interest rate cuts, ensure necessary fiscal spending, and thrive to complete their annual economic goals. Few of the country's top goals include strengthening support for the low-income people, stabilizing the real estate market, control new home construction, and improve policy to support birth. Let's now talk about China's importance in the metal market. The country is one of the world's leading consumer of metals, mainly iron ore and steel, and it's also one of the largest importers of iron ore and produces more than 50% of the global steel output. The slew of announcements we just talked about have now resulted in a bullish metal market movement, with the Nifty Metal up almost 10% as of September 30th. The logic behind it is simple. A better real estate market increases demand for key construction metals like iron ore, steel, copper. A better economy allows for more investments in major metal-consuming sectors like construction, manufacturing, and infrastructure projects. The iron ore market was one that saw a significant uptick, with iron ore future prices gaining over 10% on an intraday basis on September 30th. Prices were up 24% in the last few days. An uptick in iron ore prices could also lead to an uptick in steel prices, since iron ore is a key raw material in the steel-making process, and both these prices tend to move in tandem. This is amid a scenario of low coking coal prices, and this is positive for iron ore miners like NDTV, Vedanta, as well as steel manufacturers like Tata Steel, JSW Steel, Jindal Steel and Power, as higher steel prices could improve their realizations. Well, that brings us to the end of today's analysis. Let us know what you want us to break down next in the comments below, and stay tuned to NDTV Profit for more such insights.